Welcome to Markets Now. I'm Michelle Rook along with Mark Schultz, Northstar Commodity. A lower day for the most part in the grains. We did see higher cattle mixed in the hogs. And let's start off with the grains. Funds have been relentless sellers here. As of recent, we've taken out some long-term support. And most farmers want to know how much more bleeding they're going to have to endure here.
Well, things got pretty tough when you break out and go or start trading below your major support levels, which was 570 on the July corn, and you were $13.80 on the July beans. Not only did you take it out, but you accelerated that day and it went down even further. And again, more follow through the following day as well. So those are always bearish technical signals as it goes through. Now, you're getting to a point, and obviously we didn't see anything on the export sales that helped us out at all. In fact, it went negative on the corn and almost negative on the beans. We need to see that type of business, and it just looks like it's hard to get that because you've got a stronger U.S. dollar. You've got a problem here with the Brazilian corn harvest, which is going to begin in early June. And unless there's a surprise that corn production starts not coming in as big as they thought, otherwise, you're going to see Brazil garner the market share in the global markets for both corn and beans here for the next 2 to 3 months. Now, with that said, we still got cash corn still holding quite strong in here. Maybe we get something that bounces, but rallies back now. You got to look at 570 on July corn for the short term. Beans maybe back to 1380, about as good as you can do, unless there becomes a weather problem.
Yeah, and like we said, we can't buy a bullish story either on the supply or the demand side right now. The market perception is that we have this big crop coming at us. Funds are short already in the corn market, which is unusual going into this time of the year. So do they keep going short, Mark? Is that a fear?
Well, it actually becomes a little bit more of a fear if they start getting teetering too much to the short side and we get a scare. The odds probably favor that you're going to get some type of a weather scare in here that may give you a boost in the market. The problem is I just don't want to see it go down so much that even if you get the rally, you come back and pretty soon you look at $5.75 or 580 on December corn, and that looks like a really great place to sell. Even 540, quite frankly, now looks like a good place to be selling. And same thing on the beans. So I think the farmers that are out there, their biggest concern, quite frankly, should be not so much on the new crop. They need to be looking at the crop that's in the bin, quite frankly, needs to go and move on from there. That's how I see it right now. Because pretty soon you're going to see these bases may eventually just erode to nothing in here once the needs are covered by the end users.
So when you look at like export reports and you see cancellations on both corn and wheat, how much lower do you have to go here to start stimulating demand? I mean, there's got to be an equilibrium pretty soon.
You would think, but the problem gets to be this, is that you've got this bigger crop in Brazil, both in the beans and potentially what it's looking like to be a bigger crop in the corn. Brazil doesn't have enough storage capacity to hold all of this product, so they either have to sell it or store it on the ground. They're in the dry season right now, so it works to put it on the ground. But eventually they got to get it picked up and moved before the wet season starts again, which will be September, October. They want to have that at least picked up, or the grain under some type of a storage facility in here. So in the meantime, I would say the sales and the business is going to go to Brazil. One way or the other, it doesn't matter if we go another 50, 60, 70 cents lower. Odds favor they'll still sell it cheaper than us. And the currency is all in their favor. Their Brazilian currency is low, and the U.S. currency is on the high end. And that's not a combination for getting new demand, despite the fact that prices go lower.
So let me ask you about the wheat market. Obviously, we got the WASDE report woke a lot of people up in terms of how small this HRW crop is. We get it confirmed in these Kansas crop tour results, but the market keeps going down. Is it just because we rallied too much going in, and so it's kind of buy the rumor, sell the fact, or what?
Yeah, we had a pretty strong push here of 100 and probably a buck 80 in 9 days on the Kansas City wheat. And Kansas City wheat, if you look at it on a weekly chart, you went right back up and you did poke above the best levels that we've seen since November of last year. So that was great, but that is a major resistance level in that 905, 910 area. We go above it, we just can't seem to close above it in here. So again,
True.
we had to pull back on the market. The demand is not that great. The numbers finally got approved. The surprise came off the USDA report when they said the Kansas wheat crop could be as low as 193 million bushels, which we haven't seen one that low in Kansas since 1963. Now you're going to have some uh, closeout or failed acreage on wheat in the far southern part of Kansas. That appears to be expanding in here. But when I talk to customers in that region, they're basically saying if they can get some more rain between now and probably the 10th, 15th of June, the odds favor on some of that failed acreage of wheat that they will likely go back into some grain sorghum and potentially into soybeans. But they will need more rain before that does occur.
So the bright spot right now, Mark, is the cattle market. New contract highs in the feeders today. Obviously, corn is helping out with that. But, the live cattle futures keep chugging along. And is that maybe a little bit of an idea that one, cattle on feed might be pretty positive this week, and cash trade, we may be steady or better?
Yeah, the cash trade, I think, is a little bit more of the story here. That actually looks like it's staying steady to a little bit firmer. In fact, you could start getting some 175 cash bids, 176 cash bids into the first and second week of June, forward pricing ahead. And I'm all in favor of taking that price at the present time because hedging the board at June cattle at $65 doesn't cut it. I mean, your risk is if the cash doesn't break, the June futures got a better odds of going up, not down. So I'm not in favor of doing any hedging on the cattle, but I am in favor of continuing to forward pricing the cattle. So the fact that the beef market has not buckled is on the cash end of it is probably the more encouraging sign. And for the second or third week, I believe it's the second or third week in a row now, we've had better than I expected on export sales. So that's good. Cattle guys are still moving their cattle out 15 to 20 pounds lighter than a year ago. Those are all positive signs. Now, if you start getting the moisture in these areas, you're going to start seeing the cattle staying on the pasture. You're going to start seeing farmers start to hold back heifers and put them back out in pasture to rebuild the herd. Those are the things that are going to start developing there for the cattle industry. So that actually makes it just a little bit more friendly of the way the market is starting to align itself.
Mixed trade in the hogs today, but frankly, we can't get a whole lot of momentum going in that market. And the futures at the premium that they are to the index, is that still the main problem or is there more?
Well, we've shaved a lot of that premium out of the market here, where the futures on the summer months have come down into the mid to upper 80s. And you've got the cash trade as of yesterday trading around $87 on the Western cash bid. The pork cutout has kind of been the disappointment, although at least at noon today, it was quoted to be higher substantially. We'll see. That needs to happen. If the cutouts cannot make a move up, then it's going to be very hard to sustain a stronger cash market for an extended period of time. So hopefully you would like to think that eventually the higher price beef eventually evolves and results in some better demand for the pork. Our export demand on pork has been good. It was another 31,000 tons this week on the sales, and
Yeah.
that's nothing to sneeze at. It's a good number, and we're ahead of last year on the export sales pace there. But your price of your pigs there's just no profitability in here. So there's just a continue to be
Yeah.
a short-term struggle. That needs to turn soon, or we're going to continue and should keep seeing a little bit more sow liquidation in the hog herd.
That is definitely a fear. Thanks so much for joining us, Mark Schultz, Northstar Commodity. That is Markets Now.